In this presentation, we will continue on to part 24 of our C Corporation Comprehensive Problem, this time taking a look at the review and diagnostics of our tax return thus far. Here is our Form 1120. We've been entering the information, mainly focusing in on the financial statement information, which of course is going to be the first page of the 1120, getting to that taxable income number, and the sixth page, which is going to be the balance sheet, the Schedule L, and the M1 adjustments that we're going to need to put in place in order to reconcile. That is typically the most difficult part of the return. We then thought about the payments that were going to be made for the C Corporation. They have to make estimated payments in a similar way as a sole proprietorship or a 1040 would for an individual. And so we think about the estimated payments that would happen. Now we want to kind of review the tax return. Now remember that in the review process, a larger corporate tax return would probably go through a couple different levels, a couple different eyes looking at the corporate tax return. That would be nice to be able to have if you have that option to do. But typically what will happen is you're going to have one individual that's going to be in charge of the input. You would like to be able to go all the way through on the data input process, and then if there are any view notes or anything, any changes that have happened, then come back to the original person that's been inputting the data input to make any of those types of adjustments that are necessary. So whether you're going through another review process where you're basically taking the tax return and giving it to some other process like a supervisor or something that is in charge of the reviewing of the tax returns, or whether you're just completing the tax returns in and of yourself, you want to go through the final steps of basically looking over everything you can before going through the review process. And again, typically, even if you're in a CPA firm or a tax preparation firm, if you go through the review process and you give it to the review process, once they have any adjustments, if any adjustments are there, it's going to be kicked back typically for you to make any of those types of adjustments. You'd like to pick those up before the review process as much as possible, make the review process as clean as possible, where hopefully they can just basically check out the numbers, tie them out, finalize the return. That would be the ideal kind of situation. Although, of course, in practice, because you are dealing possibly with other departments as well, like the accounting department may be dealing with the bookkeeping department, tax department, review department, there could be changes there will be changes oftentimes that are outside of your control in any case. But whatever's within your control, you'd like to basically check those off. Now, of course, the most difficult part to check off is the part that we have been working on. That's going to be the first page of the 1120, checking off the net income number or the taxable income number, and then the taxes that were paid, and then the page 6, which is going to be the balance sheet, and of course the M1 adjustments. So those are the things that we have been checking, and those are the things that are going to be the most difficult to check off. The other things you want to just look over is glance over, look through, read through the actual tax return, all the components, which is going to include more the information type of stuff. You also, I would suggest going back to, of course, your open items. So we'll do that. We'll go back to our open items to say, is there anything we skipped? We didn't go to the open items each time. You want to go to your forms here and say, do I have anything that's still in color? I usually use the color coding to show that I had a question about something. Is there anything that I hadn't picked up that it was in color that I either put here or in the notes? Then we'll take a look at the software. Often is useful in that we can take a look at the software in terms of the diagnostics. So we'll take a look at the diagnostics here. And then you may want to take a look at the tax return, and I would compare and contrast it to the prior year tax return. If you have it in the other software, in the prior year software, you can put it side by side and just take a look, glance through each form, especially the information type of situations. And it should be pretty much the same if you rolled forward the software, such as these type of questions should pretty much be the same if you rolled forward the information from the prior year software. But you want to just glance through that, make sure that those look good. And then I would typically also go through, if you have the chance, the data input screens. Each of these data input screens, if you entered the tax return in the prior year, you can check each of these data input screens and see if you have a similar amount of information or similar information being populated within them. If you see a data input screen in the prior year and you used the same software and you have nothing populated in the current point, then you'd probably want to note that. And any notes that you make, any discrepancies that you have, that any kind of question, I would put in the notes here. And then if you do have some kind of review process, someone else putting a pair of eyes on it, let them know. Bring it up to them and say, hey, I'm not sure if this is a big deal. I don't know if this is a thing or not, if this is a problem, but there was something here last year. It's not here this year. This is why I don't think it's appropriate for it to be here this year, but that's my judgment. What do you think? Let's get a couple, different opinions on this, and go forward with it. Is this important? And even things that you think are maybe not important, it might be just worth, if you have a formal review process, just saying, hey, this is a change from last year to this year. I think it's all taken care of, but maybe you see something there that I don't see, and so here it is. So I would rather have more stuff kind of listed out and brought to the reviewer's attention, so that they can just get another pair of eyes on it and make the determination. So to do that, then let's go back to the forms. First, I'm going to take a look at the open items list. So the open items list, I didn't jump back to the open items list all the time, and I typically do this in practice because I really use the color coding kind of thing over here on the Excel. So that means I put it in both places, but oftentimes I just use the color coding, and I don't get back to reviewing the notes until later, or at least at the end of the day, maybe. So now at the end, I'm going to say, okay, officer information, did I pick that up? We did go back and pick that up with when we did the W-2 information. So I'm going to say, I'm going to cross that out. I think that's done. Officer wages, we did go back out and break out the wages from the compensation. So I'm going to say, yeah, I think I did that. Then we had the calculation of the cost of goods sold. We noted that down. We did do that, so that's good. Capital gain, we got the basis and the detail, so I think we did that. I'm going to cross that out. Dividend income, I think we got the detail on that, so I crossed that out. Interest income, I think we got the detail on that, so that's good. Wages, once again, this is a duplicate. We did do that. And so bad debt expense, we had an M1 based on that. I'm going to cross it out. Meals and entertainment, we picked that up, so cross that out. Federal income tax adjustment, we picked that up. So I'm going to say, okay, according to my notes here, I picked everything up. If there was anything I didn't pick up or I had questions about, then you may want to put it in the open items here within the notes. Then I'd go to my worksheet, say, is there anything still green? I have this one green, but I know I've finished it, so that one's done. I'm going to ungreen that. And the interest income, I think we finished that one. I'm pretty sure we did that. So I'm going to ungreen that. So I think we're good there in terms of the numbers on the worksheet, indicating that we may have questions about it. Then I'm going to take a look at the diagnostics. So I'm going to go back up to page 1. This is going to be something that Lacert has. Other software will typically have it as well. Now, the diagnostics will typically be broken out in most software to kind of 2 types of diagnostics. One, hey, this is a critical diagnostic and possibly we can't file the return unless you finish it. And then 2, and most of these are just because it's too early in the tax season, the forms aren't finalized, so we don't have that many critical diagnostics here. And then the ones down here would be, hey, these are diagnostics that we may be able to file the return with, but we just want to give you, a heads up on let you know about those, so that in case you want to take a look at them. So I'm just going to pick up a couple of these. Again, most of these have to do with the fact that it's early in the season and all the forms are not finalized, and therefore the program would not be able to process the return if they were not finalized. We'll take a look at this one. The title and signing officers must be present for e-file returns. So that's an informational type of requirement. And so if I go back over here, I need the title of the signing officer. So I'm going to pick the title of the signing officer. I'm going to say it's the president and the CEO. Now I'm going to pull back over to the diagnostics, see if it picks it up. Hopefully it will, because we have the president and CEOs, all their information in the system. So hopefully that'll take care of the diagnostic. And then we have the method used by valuing closing inventory is missing. So closing inventory and the cost of goods sold calculation, another information type thing. So is it cost or lower of cost or market or other method? I'm going to pick lower of cost or market. So notice and these are very useful, especially when it's the first year of data input. Second year of data input, this kind of informational stuff will probably roll forward to the next year, and we won't have to do this again. But if it's the first year, then that we've put it into our system, we might have some more diagnostics, and they can really help us out with some of these informational type of items. And then down below, we have Form 1120, Schedule K. Question 15A concerns filing forms 1099 and has been checked no by default. This is typically something one of those questions you always want to look at, because this software always marks it as no. So there's a question on the return that says, if required to file forms 1099 in 2019, did or will corporation file? And typically we would want to say yes, right? If it's a corporation of any size. So what's a 1099? Sometimes if you pay somebody else, like a contractor, and they're not incorporated, then typically you have to tell the IRS, hey, I paid these people. It's kind of like a W-2, but it's a 1099 informational form. And that's basically telling the IRS, yeah, we paid them. Make sure, go after them and take some of that money that, that we paid them. Just like a W-2 would be, right? We would tell the IRS, hey, we paid these employees. IRS, you're welcome to go take some of their, money because they owe their taxes on it. So the same with the 1099 is obviously forced by the government for the payer, because the payer, us, the corporation, wants to take the expense, and therefore the IRS has leverage with the corporation to have an informational form such as the 1099 to be reported in order to take the expense. So typically we would say, yeah, they had 1099 forms. Most decent-sized corporations will have contractors and would need to issue 1099 forms, and that's outside of the tax preparation, but we would hopefully say that they did, and we want to check with the corporation, did you file the 1099 forms? And if they say yes, which would hopefully be the case, and we're going to say yes, and tell the IRS, yes, there were 1099 forms, and they have been issued properly to the government and to the recipients of the 1099s who did the work. Okay, taxpayer authorized salaries and wages have been entered as a business expense in the deduction screen, but no corresponding entry has been made into the input. So I'm going to go back over here, and we're going to say that we need to have the number of employees, and I'm just going to put like 31 here. See, and again, we would obviously want to check into that possibly from the payroll tax returns to help pick that number up. And those are some of the diagnostics that can then be picked up. So then I'm going to go back to the forms, and like I say, we check basically the numbers. I would go back through and kind of review the numbers, and if it's the first time that you're inputting this information and you're getting it from a hard copy return that you did last year, and you didn't enter it into the software for last year, like I would think would be the best way to do it, then you want to check all the information, right? You want to check off the date, employer identification number, date incorporated, and so on and so forth. And then the numbers should be for the current year. We'll then go to page 2. So we have Schedule C, which we have taken a look at, and then we'll go to page 3. We have the Schedule J, which is the tax computation that we spent a bit of time with in the prior presentations. We've got the Schedule K, other information, and this is where you might want to spend a little bit more time, especially if it's the first year of putting it into the software, such as check the accounting method. So we picked the accrual method here. You want to make sure you want to check that you have the correct accounting method. It should be consistent with the prior year. Once we have it in place, it'll roll forward to the next year. See the instructions to enter business activity code. We have that, the business activity, product, service. These should all line up to the prior year. So it should be the same typically as to the prior year. 3, is the corporation a subsidiary in a affiliate group or part subsidiary control group? No. We're going to say at the end of the year, did any foreign or domestic corporation, partnership, trust, or tax-exempt organization own directly 20% or more? We're going to say no. Did any individual or estate own directly 20% or more, or own directly or indirectly 50% or more? We're going to say no. At the end of the tax year, did the corporation own directly 20% or more, or own directly or indirectly 50% or more of the total voting power of all classes of stock entitled to vote any foreign domestic? We're going to say no. And then scroll down to number 6. During the tax year, did the corporation pay dividends in excess of the corporation's current and accumulated earnings and profits? We're going to say no. At any time during the tax year, did one foreign person own directly or indirectly at least 25% of the total voting? And no. We're going to say 8. Check this box if the corporation issues publicly offered debt instruments with original issue discount. We're not checking it. Enter the amount of the tax-exempt interest received or accrued. So that has populated for us. We have 10. Enter the number of shareholders at the end of the tax year. We're going to say there are 2. 11, if the corporation has an NOL for the tax year. We don't have one. 12, enter the available NOL carryover. So that information return, we want to just kind of review that, check that over. Schedule K continued. 13, are the corporation's total receipts for the tax year and its total assets at the end of the tax year less than 250? We're saying no. Is the corporation required to file Schedule UTP? We have no. Did the corporation make any payments in 2019 that would require it to file Form 1099? Yes. Typically, that would be yes. So you want to check those off because this software defaults them as no. Hopefully, that's the whole 1099 thing that we looked at earlier. 16. During the tax year, did the corporation have an 80% or more change in ownership, including a change due to redemption? We're going to say no. During or subsequent to this tax year, but before the filing of the return, did the corporation dispose of more than 65%? We're going to say no. 18, did the corporation receive assets in Section 351 transfer? We're going to say no. 19, during the corporation's tax year, did the corporation make any payments that would require it to file Form 1042? We're going to say no. Is the corporation operating on a cooperative basis? We're going to say no. 21, during the tax year, did the corporation pay or accrue any interest or royalty? We're going to say no. 22, does the corporation have gross receipts at least $500 million in any of the three preceding? We're going to say no. 23, did the corporation have an election under Section 163J for any real property? We're going to say no. 24, does the corporation satisfy one or more of the following? The corporation owns pass-through entity with current or prior year carryover. No. The corporation's aggregate average annual receipts for the last three preceding the current year are more than 26 million. We're going to say no. The corporation is a tax shelter. We're going to say no. Is the corporation attaching Form 996 to clarify as a qualified opportunity fund? We're going to say no. And then we have page 6, which we spent some time on, the Schedule L, which is, of course, the balance sheets in balance. The M1 looks good. And then we have the N2 we haven't spent as much time on. This is the analysis of unappropriated retained earnings per the books. So that's the beginning retained earnings up top is the beginning retained earnings up here. Then we have the net income for the books, which is the net income for the books up here. Then we have the distributions, which are what was paid out, basically the dividends, and that gives us the ending balance. We're basically calculating and recalculating the ending balance or the retained earnings or reconciling retained earnings at the 4,551,500. That's the 4,551,500 here. You'll recall that the 1120A is going to be the calculation of the cost of goods sold. So we recalculated the cost of goods sold. We added this information now of the lower of cost or market. Then we'll go to the 1125 Schedule E. That's where we have the compensation of officer information. So we reviewed this in a prior presentation. We went over the officer compensation as we broke out the wages. We got the Schedule D. This is similar to a sole proprietor or to a 1040, an individual tax return, in that we have the information return for the capital gains and losses. We have to calculate the capital gains and losses. We took a look at that, and we had the long-term capital gains and losses. Those then pulled over to the first page. We've got the 4562. That's going to be the depreciation and amortization. So we have the depreciation and amortization, which is supported by the schedules that we've basically been working with down here for the most part. And then if we go to page 2, we have page 2, which is the maker's deductions. Then we got the 4797, sale of business property. That's the business property, plant, and equipment that we sold. And so we had the property, plant, and equipment that we sold, gain down here. And then if we go to the 4797 page 2, we'll get some more detail on it, which we took a look at when we were figuring out the sale of the equipment. Then we have some federal statements. So we have the federal statements and the others. So other deductions. Note we have a little bit of some messy stuff here because we reversed some things out with the M1s. So we could go back in if you wanted to clean this up before actually sending in the return, removing the M1s. So that you get down to just the other deductions rather than like these things going in and out of the other deductions. We got the Schedule L line 6, other investments. We've got the other assets. We've got the other current liabilities, other liabilities, page 2. Then we have the statement 6 from the M1 schedule. This is the book expenses not included. Notice in the Lacert software, you could get to some of these statements directly from the data input screen on the tax return, but here they are in a separate schedule. So these are the M1s for the bad debt expense, sale asset adjustment. This is an M1 for the deductions not on books. The capital loss carryover absorbed, the capital loss carryover Schedule D. This is the Form 1125A and the depreciation that is on that schedule. Lacert also has a nice little summary. Here we have a similar kind of summary for a Form 1040 for the individual, which basically breaks down the information in a more isolated situation for basically the numbers of them. So we have the income, the gross receipt, cost of goods sold, gross profit, and so on, the deductions, and then the taxable income calculation, the tax computation, the payments and credits, and then the refund or amount due. So this is a nice sheet to be able, if you're working with clients or trying to explain this to somebody else, it might be easier to use this sheet rather than the 1120 itself, and then break out the 1120 with more detail. The other thing that's nice about this sheet is it gives you those two rates, that marginal tax rate and the effective tax rate. The marginal tax rate is basically the highest tax rate. The effective generally is the average. And then we have the balance sheet information as well. So we have the balance sheet information, again, in a kind of a more summarized, quicker form that we can take a look at that might be easier than the Schedule L on the Form 1120. Next, we have worksheets, including the charitable contributions and deductions. We have the computation of ending depreciable assets, the computation of ending accumulated depreciation, the computation of net income per books. So this might be one that you might want to spend a little bit of time with if you want to look into those M1 adjustments as well. Then we have, of course, the depreciation schedules. We've spent some time with these. We have them for 2019. We have the summary, the regular, and then the book. And notice we also have them for 2020. That's really useful because obviously the tax software for 2020 doesn't come out till the end of 2019. And if you have a client that sells equipment during the year, it'd be nice to be able to use your software here to calculate the depreciation schedules. And you can do that. You could put it into you can put that information into this 2019, even though it's for 2020, and then let it calculate the 2020 depreciation information. So that's useful. And if you do that and then roll forward the information, then those purchases or sales and purchases and whatnot that you entered into the 2019 will roll forward to 2020, and they'll already be part of the calculation in 2020. So if you're working with clients or something like that, or you're using your tax software, then that could be a useful tool to have. So again, once you review all the forms, then I would go to each of these data input screens and actually compare to the last year if you could, right? So these are this isn't as useful if it's the first year and you don't have the prior year data input screens. But if you have the prior year data input screens, you might want to just go through here and just check and see if there's any numbers in the prior year that there's no numbers here, if there's any numbers here that are no numbers somewhere else, and especially check if you see any things that have that override within them. If they have the override, you may want to just note those down. Anything with an O, just write that down and say, hey, I forced this because there's an override. I know that's not typical. We don't want to try to override things because it messes things up. So these are the things that I override. This is why I did it. Does it tie into last year? This is why I did it, because they did it last year, which isn't, that's not the overall end all kind of reason just because they did it last year. But, I'm following what they did last year. If there's an override last year, maybe that there's a reason for it, right? So you want to note all that kind of stuff down, and just going through the data input screens can be useful to pick up any of that information.